Hello traders, so welcome to the weekly Outlook and Setups volume 213. Iliya here. You know what we're going to be doing, having a look at the markets, what kind of setups we had this week, and most importantly what we can expect for the upcoming week. This one was actually nice. We did have some movements, although it was slightly bit tricky. Once again, we did have some important news like CPI, we had a couple of speeches, and the conflict, or should I say war, between Israel and Palestine going on right now. The market got a little bit tricky, but of course if you keep showing up you are gonna end up profitable. So I did end up profitable, but not by much, because I did make a mistake to trade during the news on indices and stuff like that. So I'm gonna of course show you all the trades that I took, but first of all we're gonna have a look at the analysis overall for the pairs. So of course, without wasting any time, make sure that you're subscribed and turn on the notification bell in order not to miss all the amazing videos that are incoming. So if you already did, let's actually head into it and keep it nice, short, and simple. Alright, as always, getting started with a Dixie, but before we do that, let's have a very brief look at the news for next week. So we don't have any major news on Monday. Tuesday starts with the CPI for the NZD. We have Bank of Australia meeting minutes right there. We have a couple of GBP news, retail sales, and then we have consumer CPI for CAT. So from these, nothing really interests me personally, apart from the GBP news that are not like very important, and retail sales for the US. Wednesday, we have GDP for China, and then we have CPI for GBP. So that is very important Wednesday for the GBP traders. And then again, nothing too much. We have retail sales all the way on Friday. So what I do like is that there are no major news on the USD. There are no major news on the Euro. And we do have a couple of GBP news releases, right? And of course, if you're trading the Aussie and the NZD, you gotta be careful on Tuesday, but they really do happen very early in the morning, like during Asian session. So nothing much to worry about for next week, which is a good thing. So let's focus on the charts. Now, if we have a look on the weekly chart on the Dixie, well, for once again, we're having a bullish week. So again, like from last week, as we had this very nice rejection candle, we thought that maybe a pullback could initiate, but you can see the market actually did push down to make a wick, and then it closed pretty bullish. So again, the big question comes in, are we going to continue going higher next week? Well, let's see. The only high that I see very close is this one. So are we potentially driving towards this high? It's like 130 pips, not a lot. So of course, let's see. Dropping onto the daily time frame, well, it's gonna be a slight bit of a decision point right now, because if you have a look, we had a daily break here, and then the market technically came down and broke this daily low, but I want you to see how it broke. So if you watched my video on market structure mastery, so for wick breaks and body breaks, you know my arguments right there, you can see that here we have a very slow move to the downside. So the market moved down for how many days? Like for 7 days, but the market pumped up for 2 days. So definitely the momentum was much more to the upside rather than to the downside. We made a wick break, and then look at that. We have a very nice morning star formation printing right there. Also formed imbalance on the daily. While you can see on the move down, there is no imbalance at all. So that makes me think we just came in to make a quick TC to grab liquidity in order to keep carrying on to the upside. So that is my theory so far. And of course, the 4-hourly time frame is gonna tell you the story. It's the best time frame. Why? Well, because we have here a break of structure lower, and then a break of structure higher. Again, you can see break of structure lower with a wick break, printing that morning star formation, and a massive expansion higher. And of course, you can see that this is our daily imbalance right there. Now, the trick is that we also formed another break of structure right there. So technically, our higher low formation is this guy right now, but I really do like that day. Well, it's not really a daily zone, but because really for me, this is where the big push initiated. Okay, so keeping it extremely simple, I am gonna say I am more bullish than bearish on the DXY, and I do think we're starting to shift the sentiment, because you can see we had, like since the beginning of October, we had a little bit of a risk on sentiment, which means that the Dixie is declining, but right now we're back at risk off, which means that the Dixie is gonna be pumping, so everything else is gonna be falling, like Euro, Pound, Aussie, NZD, everything against the US dollar is gonna be falling potentially. And yeah, you can see then, of course, after the first trend changes, everything to the left becomes liquidity. The next very short-term liquidity is this, and pretty much the next one is going to be the daily high. So how I imagine this is either like this, or maybe the market could pull us back a little bit more to the downside and then kind of shift bullish and start trading higher. So those are the two scenarios. I don't really see a short scenario. I mean, can we make a TC down and go lower? Definitely could happen, but I would focus on the longs just because of how everything looks like on the higher time frame. So that is the DXY long bias. Let's see if the rest of the pairs are supporting a long DXY. So Euro USD on the weekly time frame, well, pretty much similar to the Dixie's candle. We have a very nice wick up and then the market rejected all the way down. So this one, like really every time I look at this chart, I really do want to see like some sort of a pullback, because look at here, had a nice push, pullback, nice push, pullback, push, right, pulling back. Right now we're just sliding down, and it has been 12 weeks, 84 days of just sliding down. Well, aren't we gonna have any weekly pullback? Well, we don't know. The most recent liquidity was taken right there, and we just closed with a body below it. The next one that I see is this one that is also taken, and pretty much the next one is all the way down there in terms of the weekly. So we gotta find something more recent. And yeah, then of course dropping onto the daily time frame, exactly the same situation as with the Dixie, but here we have a body break above, right? So there is that break of structure lower. The market came in, and then I told you, maybe I've told you, right, this is the decision points. Or are we gonna reverse, or are we gonna break up? Well, we did break up, right? But now the big question is, are we gonna hold from the longs? Okay, so like what I missed to say on the Dixie is that, I mean, yeah, this is a structure break lower. It is a trend change, but still technically if you take wicks as breaks, you have to keep an open mind and maybe say, well, okay, maybe that daily high caused the break of structure. Maybe this daily supply could hold, right? And if I actually look at EU does look a little bit better for longs. So again, let's try to keep an open mind and not really go hardcore on the long DXY and shorts EU. But however, when I dropped to the 40 time frame, well, yeah, it was very tricky around here. But then, of course, the market was awaiting CPI. And when CPI came in, that is when we started rolling. So we had a webinar on Thursday. We were just talking about right there when the market was down about the expectations. And then I said, well, don't expect a big pullback. Just expect a brief pullback tomorrow. And then we continue dropping. So we took shorts from here. And technically, this one also created a break of structure lower, which has a very nice supply zone here as well. Doesn't have any balance, which is something that I don't really like. So two situations that I see: pullback and tap, or tap and reaction, and then from there we're gonna see what is gonna happen. So preferably I like to go for the short scenario to give me a nice pullback inside this forward supply and then start taking the shorts. But if it taps inside this demand zone right there, this one could definitely become liquidity. So if this low is taken, I would expect some sort of a reaction, okay? And this reaction can either be a reversal if the daily zone is going to hold, or it's either going to be a reaction to make a lower high and then a continuation down. Okay, so as I always say, just flow with the markets. Don't throw any outcomes, because I can tell you right now the market is going to do this, and then the market is going to open and it's going to do something completely different. Okay, so always think in terms of scenarios, and this is what I see right now. I am neither long, neither short. I would prefer the shorts because I really like how the market kind of swept that daily high, took some liquidity. It was very choppy right there, which means that it was preparing for a big move. And right now, the move down is really momentous. So I really do feel like we're going to be taking out the lows, but again, who knows? So there is my outlook for EU. I am more shorts than longs, which is the only thing that I'm going to say. But of course, we have to wait and see how the market is going to develop in order to see how we can strike our trades. Now, two trades I took on EU. One was on the CPI day, or no, it was not on CPI. It was on PPI or something like this. Don't even remember anymore. But yeah, so there is the trade that I took. It was from a 30-minute zone. The market was bullish both on the 15-minute and on the 30-minute. So when it's like this, instead of looking for a 1-minute alignment, I make sure to wait for a 5-minute to really give me that confirmation. So there is a 5-minute alignment. After taking out the Asian low, the market came in, and then it also aligned bullish on the 1-minute time frame. Gave a very nice push up, but it took out like the previous daily high. It took out a lot of liquidity to the left, and then it just massively started rejecting. So yeah, I took the trade from here, stop loss way below. In retrospection, I could have definitely placed a stop loss here and got on my 3R, but it is what it is. I work with bigger stop losses nowadays, and it came back and hit my break even. So that is my first trade on EU this week, and the second one was yesterday. So yeah, there were actually two trades yesterday. So in the morning analysis, I shouted out two zones. So the first zone was my the 50 minutes supply, which is the 50-minute valid range. So technically 50-minute high to 50-minute low. And this 50-minute high also take out the Asian high, which is why I thought it definitely could work out. And then, of course, we're working on 3 to 4 new entry models, which are doing wonders so far. The other one was from a 30-minute zone right there. So first of all, the market got into the 50-minute zone, and unfortunately, it did provide me an entry. So I did take the trade from here, tight stop loss above, just got in, whoop, taken out. And then we actually tapped inside the 30-minute zone, aligned bearish, and then we took the trade from here from the 1-minute zone. And then, of course, we had a safe stop loss way above the 30-minute zone. Because again, I've learned my lesson. Nowadays, I just want to keep a bigger stop loss. Then, of course, make money instead of being stopped out on those tight stop losses. So this trade, I closed by mistake because I went out, had some work at the bank, and I was just monitoring there. And my tool maybe has been left a little bit higher. So I thought I closed actually at 3.2R. But then looking at my stats, I've closed around 2.8, around 3 or something like this. I'm really not sure. But yeah, pretty much -1 and +3. That was a 2R profit performance on EU. The plan from the morning was to actually hold it towards the hourly low. But again, as the market just took out this low, took out the Asian low and stuff like this, I was like, nah, I don't want to hold anymore. But then, of course, New York threw a very nice move into the highs, and then it just continued to fall lower, which resulted in a pretty good trade. Same setup I took on GU. Both I could have held. But again, could have, should have. Not of this BS. Just take your profits and run away. So pretty much that's my performance on EU. Overall profitable. Happy with it. So let's carry on EJ. Euro Yen weekly time frame. I'm gonna try to be quick with the JPYs. I mean, same old story. Weekly break right there. The market tapping inside that weekly demand zone, but really doing nothing. Daily time frame doing some funky stuff, like it was bearish last week. The market came in, reacted from the bearishness, but then it came in and it took out the daily high, which is really doesn't make sense. Took out the daily high, and right now, like, the next daily break is here. So is it gonna hold from this demand zone? Well, let's see. It's really shitty, really shitty. And then we drop onto the hourly time frame. We had this structure break higher right there, which is a trend change. So the market pushed it, pulled back. It didn't actually respect the long trades because the valid demand zone was this one, right? So I'm not sure if I called any longs. Maybe we have to check out the previous weekly outlook. And then the market ran up. It made a new structure break on the 4H, which is technically with the hourly valid ranges, and then it broke the daily high. But then after doing this, we immediately started shifting bearish on the 4H, and right now the hourly time frame is bearish, trading from this supply and having this range on the 4H right here as well, while tapping inside a daily zone. So what I'm just gonna do is I'm gonna refine that daily zone to this one, and I'm just gonna call it daily zone, right? So right now we are in a little bit of a supply and demand sandwich right there between the hourly and the daily time frame. And when it's just choppy like this, usually again I say don't trade. Not really seeing the scenarios here. Again, I would prefer for the market to pull back and give me a short trade and then go towards that daily break of the lows, if of course the euro is gonna get weaker. As for a long setup, I really don't see it. I mean, you could try to take a long from that zone, but don't try to swing it for the fences because, again, the hourly time frame has aligned bearish right now, and the overall sentiment of the euro is short. So that is Euro Yen. Simple, very nice, actually looking from a lower low. So let's wait for that lower high formation to form and then take a short. And then, of course, if something else happens, if the market taps in deeper right there and starts doing some stuff, again, we have to just flow with the markets. So stay tuned for Tuesday or Wednesday flow with the markets. We are finally getting some action on the Aussies. So Aussie dollar, a very nice bearish candle this week. Like last week was more had a rejection to the downside, but this week it actually threw a wick higher and then it printed a very nice bearish candle. So definitely bearish signals. And really nice to see how the daily time frame actually responded from. So I really did hope I did a good analysis right there because it just looks pretty good. Again, daily zone, the market came in, and actually that daily zone was also the hourly zone, I do believe. Yep, so hourly high to hourly low, daily high to daily low. So again, the bias was pretty much bearish. But then again, like all of this was internal, so you can't really look for internal breaks. Well, you could, because again, here we had a hourly break up, and there we have a hourly breakdown, and there you have the supply zone that caused that break, and then the market just shorted from there. So, but this is all internal, because again, remember, from this high to this low, this is the current range. And most likely right now, the market is headed to be making a new hourly lower low. And I'm sad to say, but you're already too late. So if you didn't jump in from here, or if you didn't jump here on Friday, the market is already at the lows. So very, very, very low. So right now, if the market actually decides to break, that is going to be the most recent supply zone. So I would like to see something like that. A break first to actually confirm that break, then a pullback retest of the zone, and then a continuation lower. However, because we're going to be taking a massive daily low, the market could initiate a daily pullback, because look at that daily imbalance right there. So what I also see is the market taking out this low and then making a bullish trend change and then coming back inside the daily zone to pull back on the daily time frame and then to potentially drop lower. So there are my two situations. Both are actually bearish bias. So really actually looking so far, the feeling of the market and the vibe of it after this very nice CPI drop, the DXY getting stronger and all the rest of the pairs are looking like they want to flush down. I really do like shorts. So right now, exactly at this place, exactly this position on AU, you don't really have a good choice to kind of short, because first of all, if the market takes out this low, that is a lot of liquidity. And then of course you have to be looking for a pullback. If you want to take a short right now, don't do it because we're way too low. And then of course, as this low is taken, then we have to decide what we want to do. The only short you can take is if the market actually opens without taking out the hourly low and then it starts pulling back to tap inside that zone. And then maybe there you can be looking like for a 15 to 30 minute alignment and then take a short trade from there. So that is maybe a third scenario. Again, you know that I love working with scenarios. Sometimes they get too much, but again, all about the flow. So that is AU. Let's have a look at AJ. Well, being a JPY pair, once again, very big ranges, not really clear moves, weekly low to weekly high, pulls back towards the 50%, it tries to push and it fails. So then again, just to recap, this is potentially liquidity, that weekly low. Dropping on a daily time frame, well, again, the daily did make the same range as on AU did, right? So daily low to daily high, pulls back, and right now printing two very nice bearish daily candles. So this one does definitely have more space to the downside. However, once again, the hourly high to the hourly low are the same, right? So you gotta be trading internal structure. But again, just looking at how AU pushed down and already is about to break the low, AJ could also follow up, but again, it's all internal structure. So the most recent internal lower high is this one. So if you want to take a trade, then of course wait for the market to pull back, tap inside this internal supply zone, and then of course look to continue going lower. So nothing much to say about this one. You gotta be working your way on the lower time frame, like you can see, like 30-minute high, lower low, lower high, lower low, lower high. You gotta keep shorting those minor structures, or pretty much lower time frame structures, because again, the daily and the hourly range is very big. So that is AJ. I do expect short, but again, being a JPY pair, you can expect anything, right? UJ can decide to do something fun, and then of course all the JPYs go to hell. So again, as I always say, much better to focus on the USD pairs as of right now. But again, short bias on AJ, that is the setup that I'm looking for. Let's see how it's gonna play out. NZD/USD also does look like it's popping in with some steam, right? There are a very nice engulfing candle. Well, not really engulfing candle, but a very nice full-bodied candle. Potentially the next liquidity area being that weekly low. Dropping on a daily time frame. The trick about this one is that it's actually bullish on the daily, but it doesn't look like it wants to hold because it just came in and it definitely looks like a sweep of that daily high. And most likely right now it's potentially heading to be making a daily trend change. But of course right now we're going to be encountering that daily demand zone that could potentially give a little bit of a reaction for the market. I hope it does, because the hourly time frame is very bearish, right? So we just came in, swept the daily high on Tuesday, reacted, then we cooked all the way until CPI. CPI came in, whoop, that's when we launched the orders. So very fun how the market operates and how it has an agenda, right, for a potential move to be made. Unfortunately, right now, the hourly range is pretty big. Like, according to me, even if I look at it carefully, it's within here. It's not perfect, but that is the last hourly lower high. And yeah, here we do have a little bit of a pullback, but not really. So when it comes to trading the pair, not very good in terms of the hourly range. So again, your only choice here is to be flowing like with your middle time frame, like a 30-minute or a 15-minute. You can see 30-minute high, lower high, lower low, lower high. You take a short from here and you follow the flow. Like here, these kind of setups, right? Because on the hourly time frame, we could be expecting a pullback, but the range is incredibly big. like from this high all the way to this low, don't expect the 50%. Although it could happen because we're tapping inside the daily zone, right? Don't expect it. So I see two outcomes on this one. Either the market gives some sort of a pullback, but again, don't expect this. Just some sort of a pullback, like 20 to 30% pullback, and then a continuation lower. Or the market opens, takes the daily low and takes the liquidity, and then initiates a daily pullback. And then from there, we're going to be looking for the continuation. So the positioning of price is not the best right now because it's very low. So again, you either try to short it towards that daily break and towards that weekly liquidity, or if the market starts to pull back, then of course you have to wait for a middle time frame alignment and then to take the short. So that is NU, simple, plain and simple. But again, we just gotta wait to see what's gonna happen. NZD-JPY, let's have a look. So still bullish on the weekly time frame, weekly lower, weekly higher low, weekly higher high. Right now we're having a very sharp pullback down, but still, like if we have a look at the last weekly candle, this one was also internal, but we just took out the previous weekly high and then we dropped, so very bearish. But then again, yeah, the daily time frame is bearish actually on this case. So we took out the weekly high or something like this. No, we took out that high, massively rejected on the daily, causing this daily bearish trend change. Pulls back all the way up, and right now it's very nicely reacting. So if this one is gonna follow through, that is gonna be the daily target. But then the trick is here, we actually did have a trend change bullish on the foliage. That is very good because that is the last hourly lower high before the drop, right? It's not this. Then the market came in, took it out, and then pretty much the alignment came in right there. And then it just dropped like crazy. So pretty much that is our last hourly supply. Do you want to refine it like this? Do you want to take it bigger? It is your choice, but that is the last hourly lower high. So again, like similar to NU, we can just continue flowing lower. We can potentially initiate some sort of a pullback and then continue dropping lower. Those are pretty much the two situations that I see happening, right? Either the market just continue to make a downtrend, so then you have to play with the daily kind of development and the intraday development of the market. Like again, Asian range, take out the high, continuation lower, or you wait for a deeper pullback. Right there, a very clearly defined imbalance is this guy right there. So maybe wait for something like this to get filled and then potentially look for a middle time frame alignment and then a short. So again, as the market is pushing and as the market is staying at a lower low, that is usually the trickiest place because you can look for pullbacks. But again, the more you look for pullbacks, the more the market is gonna drop. So once again, just look at the market and listen to what it shows you. If it shows that it wants to go down, right, just keep going down with it. But if it shows that it wants to get a pullback, then maybe trade the pullback, but then again, be aware that the macro bias is bearish, the narrative is bearish. So if you get a bearish alignment after a pullback, then of course, look to go with that. So that's NJ, bearish bias. Although all the USD pairs, I mean the JPY pairs of the USD ones, so for example, the JPY pair of Euro USD is Euro Yen, Aussie USD, Aussie Yen, right? They all show some bearishness. Why? Well, because of their weak base currency. Right, so the Euro is weak, Euro JPY falls. Aussie is weak, Aussie JPY falls. However, USD JPY is still kind of chopping around. So we have a weekly inside bar of that previous massive intervention candle. So we still cannot take any action on this. There is a daily break. That daily break is exactly the same hourly break. That hourly break is exactly the same 15-minute break. And that 15-minute break is exactly the same 1-minute break. So we are trading in that very, very, very big internal range. So what I'm just gonna say is I don't know. I mean, this high to this low is pretty much that intervention, which just made everything super confusing. Well, for USD JPY, and if it's super confusing, you don't trade, no problem. So I really don't know what's gonna happen on this one. Like honestly, I just have no idea. It could break the highs and then it could start doing something else. It could continue lower right now, but then again, you can't really look for any trades because you're all internal. Of course, if you decide to trade internal, that's fine, but you should always be aware that the market is going to be doing it like this, like an up and down and up and down and up and down between the bigger range, right? So what I'm just going to say is leave this pair for a while, just set an alert above this high and set an alert below this low and just wait for them to get taken. And if USD JPY is your favorite pair, well, I'm sorry, but you got to find a new favorite pair for a while, right? So yeah, that's EUJ. No idea what it's gonna do, but if it goes bearish, that is gonna give fuel to the bearishness of all the JPY pairs we covered so far. So hope that is the case. because if it starts popping up, then of course that is going to make it difficult for the JPY pairs to go down as well. So that's UJ, not trading it at all. Let's have a look at GBP USD. So on the weekly time frame, we had a very nice wick to the upside that kind of came in and very strategically filled that weekly imbalance right there, and it pretty much then responded from it very nicely. So of course, in terms of weekly liquidity objectives, that is going to be the low, and then of course the next one is all the way down there, but we're most likely going to have a lot more before we reach that weekly low. So weekly time frame, definitely bearish. Now once again, the trick is with this daily push right there. So that daily push, it does look like a liquidity grab mechanism, right? So the market, because if you have a look on the daily, like the last pullback we had was this, and then since then slide down, slide down, slide down, boom, boom, slide, little pullback, slide once again. So there are periods in which the market does like a trend change to the upside just to grab more liquidity, and then it launches lower. Okay, so just because right now we're bullish on the daily, technically, that does not mean it's gonna hold, but of course it could. So keep both scenarios in mind. Of course, here we do have so the alignment actually came in right here, because again, that is according to me and how we do it at our team, right there. There are no higher lows within this area right there. So the market was bullish all the way here, and that was a valid demand zone. So the market came in. So after CPI, the massive pressure, we knew that the market is going to reverse, right? But of course, that demand zone just acted as a little bit of a bounce to give us a pullback, and then we took this short and of course targeted that low as a target. The market then ran up a little bit lower, but that's fine. So currently, as we have this hourly trend change, we're having a brand new supply zone right there, and my analysis is very simple, right? Just wait for a pullback and short. That's it. Very nice, very simple. Next target is going to be this guy. So yeah, this one actually got faked. So there is the next target. So if the market actually drops and takes the one, then of course we're still going to be waiting for a pullback and a potential continuation. So those are the two scenarios that I would like to see, preferably the first one, because the first one is going to give us a pullback, and then we can of course take a trade with the flow. So yeah, that is GU, very nice and very simple. And if I just very quickly show you the trades that I took, one was taken on PPI day. So probably like my biggest mistake this week is to be trading before news. Like not exactly before the news, but like 30 to 1 hour earlier. Like the indices, I got so many stop losses on the indices trying to trade before CPI, and GU is the same. Like this was on Wednesday, took out the Asian high, aligned bearish on the 50-minute, came back very correctively. And then yeah, I took 2 half risk trades. I wanted to take first half risk. So there it is. Like we had a 1 minute alignment right there. The market came back. So I took the first trade from here, stop loss above. And then as I saw the market was actually holding and aligned bearish again, I took the second trade from here, again, stop loss above. And again, just before the news, you're going to get chop, 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 stop out, manipulation. And then the market just goes in some direction, right? So pretty much this is a 1 loss right there, because I spread my risk in half. I was just targeting the 50-minute low, but unfortunately the market wicked me out. Then it went lower, but then again it went higher. So don't trade during big news. It's useless. But then of course Friday came in, and after CPI, right, Friday came in, we took out the Asian high, we took out we actually aligned bullish on the 30-minute, but this is a secret setup we have right there. Even though it's a structure break, we know when it could actually be a liquidity grab. So the market then came in right there, gave us a 5-minute alignment, right? So kind of a in between middle and lower time frame alignment. Again, you gotta find the balance between your time frames. And then after that 5-minute alignment, we had a pullback on the 1 minute, confirmation candle right there, and then I rode the market towards the low, so for a 3.5R, and some members held it for the previous daily low, which is for 5R. But again, like depending on where you traded from, like some entered a little bit later, so they had like a 3.5R at the daily low, but I had a 3.5R at the 30-minute low. Again, my initial plan was to hold like for the Asian low, right? But as I saw it like breaking and rejecting, I just closed here. But then of course the long-term plan was to hold for that 4-hourly low, because we knew that it's gonna break. But again, you definitely do need a little bit more balls to hold until that point, and I had losses to cover because I've been in a tough period recently. So again, I had around 6 to 7 losses And just this trade and the trade on EU brought them all back up, and I'm back into like a break-even performance for the month or for the last like 3 weeks. So again, just because you take 10 losses in a row, if you just keep showing up and if you just keep executing the strategy, 1 or 2 trades are going to bring you back up. But then of course, what is important is you just keep showing up, because then you can enter into another losing streak. You're going to cover it again, but then of course there is going to be that one period that is going to make you all the progress, right? And just actually start growing your account. Then of course you're going to enter into another losing streak. But again, nobody tells you this. Everything out there looks very flashy, very nice. Everybody's making profits and driving good cars. Well, trading is not about this, right? Money is made just like for a few months of the year, and the rest of the time is just protecting your capital and showing up. So that's GU. That's my performance on GU. Overall, profitable. Definitely could have skipped that trade right there, so I could have only had this one. And this one, in retrospection, I definitely should have listened to my macro buys and keep it towards the low, but it is what it is. Take your profits. GJ, another JPY pair. So the problem on this one is that it's bullish on the weekly, and it's like tapping inside that weekly demand zone. And I think last week we said, oh, very nice reaction from the weekly demand. We can start turning bullish. Then the daily time frame also turned bullish. And then this is actually when we said, well, yeah, it looks really, really, really bullish. But unfortunately right now we are almost making we're almost making a daily bearish alignment as well. So the sentiment is shifting once again. And if you also have a look on the 4-hourly time frame, there is the most recent 4-hourly alignment. There is your most recent 4-hourly supply zone. So what I'm going to say immediately, just keeping it extremely plain and simple, you know pretty much the vibe of the market right now. 2 situations. Take out the daily low, and then of course a retracement in a pullback, or first start the retracement and then target the daily low, and then from there you're pretty much gonna flow and see how the ranges are gonna look like. So in terms of like weekly, if this low failed to cause a high, that automatically becomes liquidity, but that really depends on how weak the pound is, and of course how strong the JPY is, and of course that depends on USD JPY. So again, JPY pairs, they're always tricky, but GJ is usually one that moves a little bit better than JPYs like AJ and NJ. So like if you're trading a JPY, Euro Yen and GBP Yen are, I do believe, the best ones. So this is my outlook on GBJ. Very nice, very simple. Let me know, guys, in the comments what you're looking for. Let's have a look at GOAT, which is taking me by surprise because I don't usually monitor GOAT, and the only time that I actually monitor GOAT is during the weekly outlook. And just seeing this right now, very surprising. So we came in to tap into that demand zone that I've been telling you for a while, that this is actually the demand that caused pretty much the move and all of that little stuff right there. And just because like we had like a wick break and then a wick break and then we had a bearish alignment right there, oops, that doesn't mean the market is bearish, but we have this overall pullback. We just tapped in and look at the reaction. So right now we're technically tapping inside the last weekly supply, but is it gonna hold? Well, that move actually happened on Friday, but no, we started from Monday, pushed, then we slowed down a little bit, and then Friday pumped. Why? So does anybody know the answer? Why did Friday pump like this? Well, yeah, this is pretty much similar to like CPI came in. And that is Thursday. So Thursday actually pushed the market down, but then on Friday something happened and the market just decided to move. So let me know, guys, in the comments, Goldmaster, what caused this, right? So I still keep my Tuesday flow right there. So we were bullish and I was calling longs from this zone right there on the 15-minute. And yeah, it does look like, yeah, either TC up in the continuation or a tap inside the zone and then an alignment. Yeah, it did actually play out. So that is pretty happy to see. Maybe I should start trading gold. But yes, right, and then the liquidity target was this, which was perfectly achieved. So okay, very good outlook. Now the question is, what happens next? Well, if I just look on the 4-hourly time frame, well, that is the last 4-hourly break, which is very clear, and that is our last 4-hourly demand zone, and we're tapping inside weekly and daily. Yeah, so that's the daily high to daily low, and we're tapping inside that weekly and daily zone. I don't know, honestly. I really don't know. So with this massive big pump up, we can expect many things. Like, I really don't know. Like, it can create a very brief pullback and then just continue going higher. It can start chopping inside the range. It can right now initiate the bigger pullback and then continuation. I really don't know. So it was clear to me that we were showing bullishness right there and that we're gonna go long, but I didn't really expect a long like this, right? So I don't know. Let me know, guys, in the comments, the Gold Masters, what do you expect to happen next? Are we gonna be taking out that high? Are we gonna be first initiating a pullback? Because honestly, I don't know. Like the logical thing for me to happen is to have a very brief pullback and then a continuation higher. However, gold moves opposite to the DXY, but not in this case. You can see DXY massively pumped up and it's kind of bullish, so gold should be bearish. So this is probably aligning with the war that is going on. Are people putting their money into gold right now, or is something happening there? Because correlation does not make sense, or this is just a pure manipulation right there in order to dump the market big time. Because if the DXY starts getting stronger, then of course gold is gonna get weaker. Okay, so again, guys, I'm just gonna let this one sit out. Give me some more data. Let's see what is gonna happen, because at this time I really don't know what's gonna happen. This is just like a little outcome that I can give, but I don't know. So let me know in the comments what you think is happening, and if any of you has any fundamental reasons for that big move, I'd love to know. Indices are next on the list, starting with US30. So we are bearish on the weekly time frame. Just to recap on that, we had a weekly bearish alignment right there, and that is our weekly lower high formation, and there is a lot of imbalance right there to be filled, and the market did throw a little bit of a wick right there to fill in that first one, right, which for me is actually enough. But then of course the question is, are we gonna be throwing one more of a pullback to the upside, although we just kind of maybe even pinked the 50% of the weekly range? I don't know. Well, we are about to see right now. And then dropping onto the daily time frame, which is rather tricky because we had a daily breakdown. And right now we are technically having like a daily wick break up. Similar situation to what is happening on EU and GU, like this daily push up to grab liquidity. So right now the question is, are we gonna flush from here, or are we gonna make one more wave higher? That is the biggest question, and again, I don't have the answer to. Now, I don't know, in terms of daily, we took out that low. There was a little bit of imbalance, it was filled, so everything is balanced. So you have to be looking right now for some sort of a move to really show you what is going to happen next. And usually we can try to search the answer on the FOH, and yes, the FOH did take out that high and then aligned bearish right there, and technically the market is bearish. I tried to short this one yesterday, but I could not because it didn't really give an entry, because it just came in very aggressively on the 50-minute, very aggressively, and then by the time, like, even the 5-minute didn't align. So yeah, by the time it aligned, then it turned bullish, and yeah, then it just started chopping around. So indices, I wanted to short him yesterday, but I could not. So the next logical target is this. So the market already tapped in. So what I would expect to happen on the open is maybe to give some sort of an intraday setup and then attack this low. And then if this low is broken, then of course we have to see if the market is going to choose to keep flowing to the downside. Like then of course, like start making lower highs and lower lows and continue going lower. Or is it going to, like, once again, the big question, throw a little bit of a pullback to the upside? Because if you have a look, like there are a lot of those flat highs right there to be taken. And the only high that was taken was this old daily high. Like there was that one, that one, that one, that one right there. So a lot of liquidity is available, but maybe this daily pullback is enough in order to start sending the market back down. So this is my outlook on US30. I'm more bearish than I am bullish, but of course, let's see what's going to happen. When it comes to the trades I took, this is only one trade I took on US30, and that was on the CPI day. So I took 3 losses on CPI day. And it's super stupid because all of them were exactly the same setup. So very, very, very stupid from my side. Setups looked good, but why did I force it? I don't know. But again, Asian high taken, previous daily high taken, bearish alignment on the 15 and the 30-minute TC. And then of course on the 1-minute time frame, it was it was also provided. So yeah, after 1 minute aligned, I took the trade from here, stop loss above, and then just whoop, stop loss. So that is my stop loss on US30. Very shitty. And then again, in hindsight, biggest reflection of this week is don't trade during news, because why would you? Because then you get chop, 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 and then news comes in, and then yes, you're right on the bias. We knew that the market is gonna be going down and taking out that low right there, and like the Asian low and all that stuff, but it happened during the news. So then after the news, if you can catch like the pullback and then a continuation, good. But before the news, don't trade. So that is my tip for you. Nasdaq looks clean on the weekly time frame because we have like here a weekly trend change. The market actually held and then it went on and made another structure break. However, this kind of structure breaks, I don't like them very much, but we are actually tapping inside the weekly supply and the weekly imbalance is filled and we're having a nice rejection candle on the weekly. Now the daily time frame, well, the daily time frame is still bearish actually, which is a very good point. That this is the daily high, right? That is the weekly. There is the daily lower high formation, and the market came in and tapped in, and right now we're actually starting to reject lower. So daily is bearish, weekly is bearish, and right now the forward time frame is bearish. So in terms of Nasdaq, it does really make sense to be going short. There is that forward structure break. Then we kind of chopped around a little bit, and we actually formed another one right there. And there is the supply zone. So extremely simple outcome on outlook on Nasdaq. Pullback and a continuation. Next target down there. So there it is. That's it. Again, a lot of things could happen. But again, this is what I think is going to happen. And of course, if it happens, I'm definitely going to make sure to strike on Nasdaq. So looking pretty nice, pretty bullish. Let's, of course, see if that is the zone that is actually going to hold. Now, the trades I took were two. One of the trades was exactly the same as on the one that I showed you on US30 trading on the CPI day. Very stupid of my side. However, Nasdaq actually survived. You can see we had that same Asian high taken, 50-minute and 30-minute alignment, and on the 1-minute time frame, we did have again the alignment, but in this case I did place a very safe stop loss. The market came in, it didn't stop me out, but then just before the CPI, I closed my trade at break even, and then it hit TP. But it is what it is. I took the smart choice of a professional trader to not leave trades running just before the news, because if this market did this, because this candle right there happened really fast, it just printed, it was down there. So if this one printed in the opposite side, I would have probably lost 3R instead of 1. So close the trade right there. I already learned my mistake at that time that I shouldn't be really looking to trade CPI. So that was a break-even trade. Fortunately on Nasdaq, there was a beautiful trade on Wednesday. So after we took out the forward high, which is a liquidity gap, we immediately aligned bearish on the 30-minute and on the 50-minute and the 50-minute as well. And then we came back to provide our Fanatic model 1. Right, so we came in, liquidity was taken, 1-minute aligns, took it right there on the TC, stop loss above, and of course I was targeting the Asian low. And yeah, pretty much the Asian low and these kind of flat lows right there that were towards like the beginning of the day, and which is also the previous daily low. And then of course, as we were traveling there, the market actually made the new valid range on the 50-minute, came back, took liquidity, aligned bearish on the 1-minute. So I took another trade from here with a rather funky stop loss, because in that case, I could have placed a stop loss here and get like almost a 3R, but that is a scale in, and you don't want to be losing your scale ins with a tight stop loss, because if this one got me a stop loss and then it ran, I would have been pretty angry, because that's going to destroy my risk to reward on that trade. So I just decided to take it with a tight stop loss and like just trail it to the target. So like I got around 4.2R on that trade. Yeah, the stop loss here is because as the market started pushing down, then I just quickly moved my stop loss in case like something happens, but target was achieved right there. So that is a 4R on Nasdaq, but I took like -1 here, -1 on US30, and then -2 on SPX. So pretty much it's kind of a break-even week on the indices, which really sucks, but it is what it is. Learned my lesson. So those are my 2 trades on Nasdaq. Let's have a look at SPX. Let's have a look at S&P 500. So this index, I'm still trying to figure out whether I like it or not. I'm absolutely sure for Nasdaq. I am 70% sure for US30, but not entirely sure for SPX. Weekly structure break with a weekly supply zone right there. Push down, pull back, filling in the weekly imbalance, which is very good. So again, the confluences are just shouting shorts. Now, in terms of the daily time frame, once again, we do have that daily bullish alignment, right? That we have across all the Forex pairs as well, like Euro USD, GBP USD. We had that sharp daily push, which I do believe is a liquidity grab mechanism. So just because it's bullish doesn't mean that the market is not gonna drop. But again, let's be mindful and consider both sides. Now, on the forward time frame, we had a break of structure higher, followed by a trend change lower, followed by a structure break lower on Friday. And Nasdaq and SPX were the two ones that actually broke the low, but if you go to check out US30, it did not. So currently this is the structure, and that is how it looks like. This break right there, it's a wick break, but then it closed with a body. So again, very similar to Nasdaq. I'm going to be looking for a pullback inside that zone and then taking it all the way down to that liquidity target down there. After filling in weekly imbalance, after taking out all of these flat highs right there, weekly imbalance almost tapped inside the weekly supply zone. It did generate some sort of liquidity right there, and it built up for the CPI. CPI caused the move down. Pullback was immediately made. Imbalance was filled, and right now we just keep making valid ranges to the downside. So confluences are shouting shorts, and I'm gonna try to follow those. So again, there is my very simple outlook. If we have a pullback, I'm gonna take a short. If we start rushing lower, then of course I can try to flow with the markets in some way, but of course that is about the intraday flow, and we don't cover this in these videos because there is no way to tell me what the intraday flow is gonna be like. Two trades on SPX, which really suck. One was once again on that CPI day, so I'm not even gonna cover it. Exactly the same. So why the hell would you take three exactly the same trades on CPI with exactly the same kind of probability of not working out? So again, I took two losses, sorry, because Nasdaq was a break even, sorry. Yeah, so 2 losses on US30 and SPX. Why? Again, setups look good. They all could have worked out, but they did not, so you lose double. A very painful trade for me was taken on Tuesday on SPX. So again, we had that. I was bullish bias and I was looking to target like the imbalance and all that stuff, and I was expecting a move higher. And yeah, 30-minute aligned bullish, 50-minute aligned bullish. We had a pullback. Then from that zone, we also had a 5-minute alignment, which was really good. 5-minute alignment, and then after the 5-minute alignment, I also did wait for a 1-minute one, which is right there. So there is 1 minute, 5 minutes. So the market pullback. I got a rather bad fill on this one. I took the trade from down there, but I got filled right here. So again, once again, really don't know if I should be trading SPX because it's really dead in London. And I placed a very big stop loss because I wanted to be safe. And then look at what the bastard did. I even shared an Instagram story on this one because that trade was painful. I mean, it didn't stop me out very nicely, but it just came in, wicked me out, and then it just massively ran for profit. And I'm sure I would have held this because I usually monitor my trades when they hit TP. And if they start printing very big candles, right, most likely I'm going to have closed somewhere right there as it started rejecting, right? And then usually when I close, the market keeps pumping up. So I'm currently working on actually holding my trades, but that one was painful. And after I actually took 4 losses like this in the recent weeks, like all of them, either a spread week out or just a week out like this, I started placing around 150 points below my stop losses. And this is why, like, I survived the Nasdaq trade on CPI, but I closed it at break even, right? So 2 losses on SPX, 1 loss on US30. Then, of course, I got the 4-hour Nasdaq, which is pretty much kind of saving my ass once again, but not really happy with the performance. Definitely could have skipped the CPI day, which would have made my week definitely a lot more profitable. So pretty much those are all my trades, and that is everything for now. So let's throw a little bit of a recap. To recap very quickly, the DXY is shifting bullish right now. So the big question is it going to continue going higher or not? So again, I have 2 scenarios right there, but preferably the first one, short quick pullback and then targeting the next liquidity area. EUR/USD exactly the same, so a sharp pullback first and then potentially to target the liquidity area. Now keep in mind the daily time frame is not aligned right now, but again, as I said throughout the video, that daily bullish alignment could potentially be the manipulation. Euro-Yen is also looking bearish. This is pretty much one of the best JPY pairs you could be trading. Aussie dollar, very nice momentum lower, but in a very bad positioning to take a trade. So I would much rather wait for the market to take out the falling low, then initiate a pullback and then take a bigger short, or if the market initiates a slight pullback on the open, then you can be looking for the short. AJ, same thing, in a very big range right now, so it's bearish. So of course, if you can get any shorts, then definitely go for it. NZUSD exactly the same as Aussie dollar, but it's like the quality high is here, the quality low is all the way down there. So I would first prefer for it to take out the sell side liquidity below here and then to potentially start pulling back. NZDN exactly the same as well, looking for some sort of a pullback. USD/JPY, complete nonsense. GU, a very nice pair so far. Let's wait for a quick pullback and then a potential short. But if it shorts, takes the liquidity and taps inside the daily demand zone, then we can be looking for some long as a counter trend trade. So again, it really depends on how it plays. GJ also is about to be causing a daily bearish alignment, and if it causes the bearish alignment first, then wait for the pullback and then a continuation lower. But if it first gives you the pullback, then of course you can go short and target the daily low, which is going to be a very good trade. Gold, I don't know, massive pump. So I really don't know what to expect. So we just got to allow the market to really show us what it wants to do. Indices, they're all bearish, and the only index that hasn't taken the low yet is US30. So if we can catch any shorts on US30 on the market open, that will be lovely. Nasdaq already broke the low, so looking for a pullback, and SPX already also broke the low, so looking for a pullback and a potential continuation. Okay, so traders, let me know how did you perform this week? Did you finish profitable? Did you lose? What did you learn? Most importantly, write me a little reflection in the comments. Make sure to like the video as well, subscribe if you haven't, and stay tuned for Flow with the Markets on Tuesday. And make sure to check the latest educational videos that I published. So wishing an incredible weekend and a crushing week ahead of you.